If you own a business, you might think the biggest risk is losing customers having a slow month or dealing with a claim. But one of the biggest risks is much more personal. What happens if I cannot work? Not for a day or two. I mean weeks, months. Long enough that the phone still rings, the bills still arrive, payroll still has to be met, and the business still needs leadership. For many business owners, the income plan is simple. I work, the business earns, and the household gets paid. But if my ability to work becomes interrupted, the question becomes very serious very quickly. Who pays me? Who pays the business expenses? Who keeps the doors open? And how long can everything last before savings start to disappear? Stay with me until the end, because I'm going to walk through the questions every business owner should ask before sickness or injury forces the conversation. So, let's get started. Today, I'm going to talk about income risk for business owners. This is not just about disability insurance, which is one possible tool, but the bigger topic is having a plan. If I own a business, which I do, my income may depend on my decisions, client relationships, reputation, and my daily presence. That creates a different kind of risk than a regular job with a steady paycheck might offer. If I cannot work, I won't have paid sick leave to fall back on. Plus, I don't have long-term disability through an employer. And what really hurts for most business owners, they don't have anyone to automatically step in to protect household income or business cash flow. This applies to quite a few business owners, such as contractors, retail shop owners, consultants, real estate professionals, truck drivers, and to anyone who says, if I'm not working, the money slows down or goes away. So today's goal is simple. I am going to go through the risk of not having an income plan in place before the risk becomes a crisis. One of the first things I have to point out is this. In many small businesses, the owner is not just the owner. They are the salesperson, the technician, the problem solver, the signer, the customer service department, and sometimes the entire management team. That means the business may look strong on the outside, but it may still depend heavily on one person's ability to show up. So if you are a business owner in this situation, you need to ask yourself a direct question. How long can your business operate if you're not physically or mentally able to work? Some businesses can run for a while because they have staff, systems, and recurring revenue. And guess what? Some businesses slow down almost immediately. Why? Because the owner is a production. Neither situation is good or bad by itself. The issue is whether you or I know which one we have as business owners. Once we understand how dependent the business is on you, then you can start building a more realistic protection plan. Now that I've identified how much the business depends on you as the owner, the next question is where the money actually needs to go if I cannot work. A common mistake is not thinking about your financial obligation between your household and your business. If I cannot work, I may have two separate financial needs at the same time, meaning one pile of money may not solve two separate problems. First, my household still needs income. The mortgage, rent, groceries, utilities, car payments, and regular family expenses don't pause just because you're recovering. Second, your business will still have overhead like rent, utilities, insurance, leases, loan payments, payroll, taxes, and vendor bills may continue even when revenue is down. Again, those are not the same problem. Let's break it down like this. Here are the two coverages that will assist in keeping your personal business expenses afloat if something happens to you. First is personal disability income. It will help replace part of your personal income if you qualify and meet the policy terms. Second is business overhead expense coverage. It will help with certain business expenses for a limited period if the owner becomes disabled and the policy terms are met. Let me be clear. I am not here to sound salesy, as if every owner needs every policy. I am saying the needs should be separated and treated as such. Household income and business overhead should not be treated as one vague emergency fund. After you separate those two needs, now you need to understand what your existing backup plan actually covers. It should start by having a savings reserve if you don't have personal disability and business overhead coverages in place. See, a cash cushion can buy you time, reduce panic, and keep decisions from becoming emotional. But savings alone may not be enough for a long interruption. Here is why. A business owner may be using savings for personal expenses and business expenses at the same time. That can drain cash much faster than expected. If you have 3 months of personal expenses saved, that may sound strong, but the business has financial obligations too, meaning those same dollars may have to perform double duty. Another issue is timing. Of course, most illnesses or injuries do not announce how long they will last. Things may start out as a short-term recovery issue, which can become a long-term income problem. So when I look at savings, I want to ask 3 questions. How many months of household expenses can I cover? How many months of business overhead can I cover? And what happens if both needs hit at the same time? Those questions lead directly into the kind of review most owners put off until they have to make a claim or face a health event. The best time to review income protection is when you're healthy and not under pressure. That may sound obvious, But the obvious is the opposite. This is often when owners avoid the conversation. When business is going well, risk feels distant and the future looks clear. Conversely, when business is tight, protection can feel like one more expense you can't afford to bother with. But the risk does not wait for a convenient season. A good review should look at income, expenses, debt, staff responsibilities, family obligations, and how long the business could function without the owner. It should also look at any coverage already in place. You want to know waiting periods, benefit periods, exclusions, definitions of disability, monthly benefit amounts, and whether coverage is designed for personal income, business overhead, or something else. Plain English matters here. Those details matter because the wrong assumptions can create a painful surprise at the exact moment you need clarity. Let me give a simple example. A small business owner has a solid reputation and steady revenue, and on paper the business looks healthy. Then he has a medical issue that keeps him away from work for several months. At first, everyone thought it would be temporary. The employees cover what they can, the family uses savings, and a few customers waited on the business to stabilize. But the business still had bills. The household still needs money. That is the real pressure. It is not only the medical issue, it is now the financial uncertainty that comes with it. Now imagine that same owner had reviewed the risk ahead of time. He had a written continuity plan, clear staff roles, stronger reserves, and appropriate income protection options in place. The point is this: protection does not remove every hardship, but it creates options when options matter most. With all this being said, allow me to provide some practical guidance. If I were reviewing this risk for my own business, I would start with a few practical steps. Step 1. Write down the monthly household income that depends on the business. Don't assume personal savings will cover both home and business expenses for a long period. Step 2. Write down the monthly business expenses that continue, even if I cannot work. Step 3. Identify which duties only I can perform and which duties someone else can handle. Step 4. Review existing personal disability income, business overhead, life insurance, emergency savings, buy-sell agreements, and any business continuation planning. Step 5. Ask how long the current plan can realistically hold up. If I'm out for 30 days, 90 days, 6 months, or longer. Let me add here, don't assume a spouse, employee, or family member can run a business without a written plan. The main takeaway is this: if I own a business, my ability to work may be one of the most valuable assets I have. I can insure equipment, vehicles, and a building. But if the business depends on me, then my income and my role in the business deserve the same level of attention. This is not about fear. It is about preparation. The owner can make decisions with a clearer head, and the family has a better chance of staying financially stable during a difficult season. Now, if this content was helpful, place a thumbs up in the comments section. This really helps with engagement and assists with pushing out this video to others. Also, word of mouth is good too. So please share this content with someone who may benefit from this topic. Then, check out my video library. I have information on home, auto, business, specialty insurance, and retirement. With all this being said, subscribe to my channel and help me get to 1,000 subscribers. But don't stop here. Check out my next video for more insurance and financial tips. And as I like to say, call Jay today.